Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. I think we're all optimistic that 2023 is going to be a great year for the stock market. After all, it's only happened a few times that the market was down one year and then down again the next year. But the reality is we just don't know what's going to happen. And if you're concerned about another bad year, there's some stocks that are absolutely worth owning for those bear markets. I'm Jason Hall. This is The Smattering, and I'm here with Jeff Santoro. Jeff and I, we're going to talk about Berkshire Hathaway. Hey, Jeff.
Hey, Jason. I remember during 2020 and 2021, Berkshire Hathaway was treated by a lot of people as old news, too slow of a grower, and here we are. It has outperformed almost all of those high-flying stocks over that time. So it's a no-brainer for your portfolio if we do have another year of a down market.
There's a couple reasons why, and as a starting point, if you look over the past decade, none less than Warren Buffett himself has made it clear that it's going to be harder for Berkshire to outperform the broad market when it's in its bull runs, because the company has gotten so large, and the way that they grow by allocating capital to new acquisitions and to investing in that stock portfolio just makes it a little bit harder to necessarily outperform the market on a regular basis. Now, I think you have to take that with a grain of salt because, like Jeff said, we've seen the company continually be a market beater when everybody's turned their back on it. But the reality is, Buffett has also said, when the market's down, this is probably going to be one of the best stocks to own. And the reason that's the case, Jeff, is because of the diversification of the assets that it owns, the way they generate cash flows, and then what Buffett, his two investing lieutenants, what they do with that capital to put it back to work for shareholders. So you think about its most important businesses, Jeff, they're relatively recession resistant. They generate good returns and cash flows just about any time. Geico Insurance, its reinsurance business, the massive utilities business. These are things that people need in a good economic environment and a bad. You think about the cash flows that Berkshire gets from its dividend stocks that it owns. One example, Coca-Cola was going to pay the company $700 million in dividends this year alone. So there's a lot of value to those cash flows. It's seen as very stable. It has a rock solid balance sheet, and investors are going to see it as a safe place to be, to shelter in the storm, so to speak. So if we do see economic conditions continue to deteriorate, it get harder on the consumer, interest rates continue to rise, guess what? Uncle Warren's going to be right there to take care of your money.
Even though this is a video about stocks to own if we see a bear market in 2023, we want to be owning companies for way more than just 1 year and through multiple market cycles. So the nice thing about Berkshire Hathaway is it's a great foundational and ballast stock to just have in your portfolio. And you're right. If we go through another bull run, you're going to be looking at other shiny objects that are going to be doing better in your portfolio. But Berkshire's not going to lose you a lot of money, if any, and it'll be there when the market inevitably turns back over the next, several decades that we all hopefully we all own this stock for.